In this edition of Three Topics, I'm talking to Matt Williams at Airlie Fund Managements. Matt, thanks for your time today.
Thanks, Glenn.
Now, for the first of the companies, you were going to talk about one of the mining, something from the mining sector.
Yeah, Mineral Resources. It's a company we've had a long association with, been a shareholder since it floated back in 2006 on the market. It's had one of the best track records of any company, be it mining or industrial. In that period, it's been a return on investment of over 20%, and they've successfully navigated the cycles. We like it because it's quite a unique mining services business in that it's got very much recurring revenue, not sort of tied to contracts or capex cycle that a lot of other mining services companies are. And it also has its own mining, where it's very cleverly built up quite a good little iron ore business that, although when prices are low, struggles to earn its keep, but at the current high prices does very well. And all this, it's got a net cash balance sheet, and it's hunting around for distressed or new assets that it could add value to. And so, with that in mind, we think it's a good stock for the future. It's a real medium-term kind of stock. It'll get buffeted by the iron ore price, but the management, the founder, Chris Ellison, has just shown over the 15 years or so that he's a fantastic capital allocator, and we expect him to continue to work his magic.
And probably something of a surprise, I mean, given the private health sector, the private health insurers have been knocked around a bit in more recent times. You've got something from that sector as well.
Yeah, look, it's not the most exciting company, and the outlook, as you allude to, is a bit tough. But Medibank Private, we think, is a long-term play on basically the ever increasing spend in healthcare. Despite the sort of regulatory ups and downs and the current sort of participation issues that it has, people dropping out of insurance. The fact is the government needs this sector to survive. It needs this sector to thrive, to take pressure off the public sector. And so really we think it's linked into the ever increasing spend on health that comes from both private and public. In the meantime, Medibank has a net cash balance sheet. We'll get a dividend from it. It'll yield over 4%, and then with franking could take that up to near 5%, which we think is pretty good in this environment.
And Matt, the third company is a fuel retailer, formerly known as Celtx.
Yeah, Glenn, Ampol. It's been it's had an interesting couple of years. This company. Just before the crisis hit, it was actually the subject of a takeover bid from a Canadian, convenience store operator. Unfortunately, then it was, in fact, and there was even further interest in the company from another group. Unfortunately, the crisis hit and put paid to all that, and obviously the fall in the oil price has really pressured their refining business up in Brisbane, which has now been put on care and maintenance. And the stock fell from there was a bid on the table at 35, the stock fell to 21, and it was one of those stocks we added to during the crisis period. We increased our holding, and today it's back at around the 27.60 mark. Yeah, look, we think it's a company with some great assets, and that was recognised by these bidders. And we think that there's a new management team, a youthful and energetic management team that have some fresh ideas, fresh thinking, and hopefully we can see them sort of push the business forward. And their first effort with that is that they're going to sell quite a big portfolio of their petrol sites, their retail petrol and convenience sites, and that will, we think, be a value-adding transaction. It'll allow them to reduce debt, and potentially we might get some capital management out of that. We think we'll get a dividend, at some point in this next 6 months, and I think it's not a bad, not a bad company to, it's not exciting, it's not going to make anyone rich quickly, but it's it's a solid long-term business.
Great, that's some really interesting food for thought there. Appreciate your time.
Thanks, Glenn.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.